Hello, traders. Hope everyone is good. Um, for those who still struggling with their trading, hope they are making progress. Guys, here's another trade breakdown on USDCAD. I did this analysis back in April, yes, beginning of April. It's one of my trades breakdown I told you about. That I will do a series of videos where I do a trade breakdown on those analyses. I started with video analysis so that I'll show you that I do not fabricate the charts. Yes guys, let's get to it. Again, it's time and price. Guys, if you really want to trade fractal markets, when I'm talking about fractal markets, I'm talking about a top-down analysis from a daily time frame all the way to 1 minute, even second based time frame, 30 seconds and 15 seconds. Yes, you really, if you're going to do a top-down analysis, let's say this one on USDCAD, it's from daily all the way to 1 minute. So if you want to execute your entries on 1 minute, you need precision. You really need precision. And regarding precision, that's where sessions comes in. So yes guys, let me show you the first screenshot. Here's the first screenshot, an accumulation. This is a spring, sorry, let's CPN a spring, and this is after screenshots. So let's get to the charts guys. I will do an overall trade breakdown from high time frame all the way to 1 minute, so that you will see how a convincing case is built. You do not just execute your entries on lower time frame. You build a convincing case, and you need confluence, not just two confluence. Maybe you need like lots of confluence to build a convincing case. If you watch my previous videos, when I'm talking about a convincing case, I'm talking about what work I was talking about, that you need a series of confluence. You need like everything to line up. So if you're looking at daily H4, 1 hour, 30 minutes, 15 minutes, 5 minutes, 1 minute, everything should point bullish before you even look for a trade. Let's get to it. Guys, this is a daily time frame. You see that this was a downtrend and then the price broke the structure, and this is where this accumulation happened, and it's happening on this early phase of this bullish move. And you see this trend line, and let me zoom in. you see this trend line and these equal lows. The price is bullish. And another thing, you see higher high, higher low, higher high, higher low, higher high. You see that the market, even if it's manipulated this trend line, but it didn't break the structure, the daily structure, it's still bullish, because this is an internal structure, because it didn't create a new high. So this move is just an internal structure. Overall, we are bullish. We are just grabbing the liquidity, manipulating this trend line liquidity and these equal lows. I will explain why I selected this HR point of interest, because let me show you. You see, I hope we're on the same page that we are bullish. This is just the trend line manipulation and the manipulation of these equal lows. This point of interest, it's because it's manipulated this liquidity, and after this move, break and retest traders are selling this bearish engulfing candle. A lot of people jumped in the close of this candle due to fear of missing out, and this move took all the stop losses. So that's why it's significant. That's why I selected this point of interest, and that's where our textbook accumulation was formed. Right after it's manipulated the daily trend line and those daily equal lows, and it went on to mitigate the point of interest when this is a creek. By the time I was doing an analysis, the price was around here. I expected the price to mitigate this point of interest and went on to create a SOS. This trade idea, this one, it's this one, and these equal lows. It went on to create a new higher high with the risk reward of 1:4. Not bad. But my main trade was on this order block. You see that the price accumulated and finished accumulating and went on to mitigate this point of interest. It was mitigated right here. That's where we go to lower time frame. Let's go to 5 minutes. You see this type 2 accumulation after the price mitigated the point of interest, the H1 point of interest. That's where time and price comes, because markets, guys, are fractal. Markets are fractal. You see, it's a nice accumulation. A nice accumulation. PSY and climate integration secondary test. You see, a lot of people were definitely buying at this point because they saw this bullish move, bullish order flow, and the price went on to manipulate. It created downside liquidity and manipulated downside liquidity and broke the structure to the upside. Let's go to, you see this entire accumulation, type 2 accumulation, it has no spring. Let's go to 1 minute. Okay, before I go to 1 minute, this is where London session opened. Sorry, Frankfurt opened, London session opened, and New York opened here. You see? Frankfurt open right here. It went on to create this bullish after this break of structure. It went on to create this bullish move, but manipulated this inducement. And there's liquidity here, created this bullish order flow, manipulated this bullish order flow, and London opened, and people were selling at this point after the price broke the structure. The price went on to manipulate and created the liquidity, the trendline liquidity, and went on below, and other people were buying at this point to say these equal highs, sorry, these equal lows, and London session went on to manipulate. You see, Frankfurt opened, created the liquidity and manipulated that liquidity, and London opened, manipulated the liquidity created by Frankfurt. You see, these equal lows were created by Frankfurt. London opened, manipulated this upside liquidity, and went on to create another third touch. You see, in this minor reaction, and went on to manipulate the liquidity. And later on the session, London created this momentum trend line and these equal lows. You see, and went on to manipulate. London went on to manipulate this trend line with multiple touches, but it gave a little bit of reaction, you see. It gave a little bit of reaction. You see, this rejection, a lot of people were expecting to sell and manipulated this liquidity, trendline liquidity. And around this time, New York opened, and it's continued with this bullish order flow. It's open, created a new high, and this it went on to manipulate this trend line and gave a little bit of reaction on this trend line. Give a little bit of reaction and manipulated this trend line and went on to manipulate these equal lows. All the liquidity that was created during London session, New York went on to manipulate this trend line created by London session and these equal lows created by London session. And after that, there was no other liquidity that was left unmitigated, and the price created, you have to see the market intention, like Alex, Waka and Wally, they always talk about market intention. you have to be able to read market intention. You see, after this grab of this liquidity of these equal lows, the price went on and broke the structure and created this high. You see this high, low, high, low, high, this bullish order flow. And later on, it's created this inducement and this momentum trend line. And this is the last demand that is left unmitigated. Guys, at this point, we have to see how fractal markets are. It's a 2 pip order flow. It's a 2 pip demand zone. But this 2 pip demand zone, if the price goes below by even a single pipette, the entire bias change. The entire bias change. You see, we started from daily, all the way to 1 minute. And this 2 pip stop loss demand zone has completed the market intention. Even liquidity is created even on second base time frame. You see this 1 minute trend line. Let me see. It took 2 pips to manipulate that liquidity. Wally and Waka and Alex, they always talk about that a 5 pip move in a market cost someone billions of dollars. Some people, they call M1 price action, they say it's just a noise. Guys, there is no noise right here. There is no noise. It's pure price action. You see how each session led to another session, creating the liquidity that would be manipulated by another session. And what I've noticed about time and price is that after creating a liquidity, and it happens in lower time frame, 1 minute, even second base time frame, you will see that the price is creating downside liquidity and break the structure to the upside. It holds the high time frame bias. The high time frame points bullish. Daily, 1 hour, 30 minutes, all the way to 1 minute. It's point bullish. So this is the only order block that was left unmitigated. That points bullish. And it's manipulated this inducement and this, and went on to the upside. Guys, time and price. And during session, price action, before price action, the spread, it's very, very, very tiny. The spread is very thin, and the price action happens like smoothly. If the price went below this point of interest, it would have changed the entire bias all the way to high time frame. There is the other day where I talked about That's a 1 minute accumulation or 1 minute redistribution can take out a daily structure. You see this 1 minute 2 pip stop loss order block. This order block holds that high time frame bias, bullish bias. Everything points bullish, and M1 holds that entire bullish perspective. This 1 minute order block, because if the price went below this point, it would have just melt and change our entire bias. But you see a series of mitigation, held price action. There is no order block that is left unmitigated. There is no liquidity that is left not manipulated. Guys, I hope you will enjoy this content, and please, if you enjoy such content, please subscribe. If you also have questions or comments, please drop them below. I would very much love to hear your thoughts. I still have lots of trade breakdown to do, and to help you guys, help each other to improve in our trading. But time and price. I've backtested trades. Wally, Alex, and Waka, and Pips of Persia. All of those people who trade massive risk to reward, they build their case. They do not rush into executing the trade. They build their case, and when they pull the trigger, man, that's why they achieve 1:50, 1:100, even 1:200, even above. I just saw Pips of Persia's trade. I think it's over 1:1000 if I'm not mistaken, because he had a 2 pip stop loss, 2.5 pip stop loss, if I'm not mistaken, and over 2600 pips. Man, those guys, it was my first time seeing that high risk to reward. But the trick, or the tip to their success, time and price, most of their trades are executed during sessions, because during sessions, price action and manipulation, man, guys, I don't know how can I express the magnitude of time and price. I'm going to continue study and live test. This was the only thing that was missing in my trading. That's why I lack precision. If you want precision in your trading, time and price sessions. Guys, hope you enjoy. See you in the next one.